Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going to read over some of the comments and give you my financial opinion. It's just an opinion. It's okay if you disagree with the opinion, but I'll give you what mine is, and we'll jump right into some of these questions. It says, do you see gold holding up if the dollar heads to high 90s? It seems like gold would dump to 1550 support in that scenario. It very well could. We are in a downtrend. I haven't seen a bottom yet, but it doesn't necessarily mean that if just that one metric goes up, that gold would necessarily go down. What's tough is that all of these currencies are getting debased massively. So you're basically saying the dollar is strongest amongst a falling currency. And what I'm trying to iron out here is, could the dollar go up and gold go up at the same time? I think yes, because money, I think, is going to rotate. If we get higher interest rates, money will rotate out and it'll have to go somewhere. And I think that somewhere is precious metals. But again, we're going to have to watch and see. I don't have the answer here. Usually in expansionary phases of real estate and gold going higher during that time frame, usually the dollar goes down, that index. So we might see something that's different than history. And I'll be here with you guys. We're gonna watch this and see what the heck happens. But I mean, we're seeing oil go up, and that's a huge inflation hedge. Oil and interest rates, the 10-year yield, they go up together, kind of. So we're gonna see what happens. And usually, inflation comes with oil going up. So it's a good question. I don't have a really compelling answer for you. What if the expansion in real estate has happened already and coming to a conclusion? It's been an uptrend for 10 years already, right? Well, so we're not, the beginning stages of real estate moving higher is a recovery phase, not an expansion phase. The recovery phase, what happens is your inventory it shrinks over time. It gets eaten up and it comes to a very low point. That's exactly where we are today. We have very low inventory. What happens is people are going to start buying new homes instead of buying existing homes because there's no inventory of existing homes. And that kicks off an expansion phase of real estate. So we are projected at roughly a 5 million home shortfall we're short 5 million new homes. That is a huge imbalance in the market. And I don't know if we've ever been this out of whack. So we can't be ending an expansion phase before it has even begun. We need to build homes. And the homes, if we were at the end of an expansion phase, we would have high inventory levels. The market would be better balanced. And that's why there's no possible way that we're at the end of an expansion phase, because we haven't even begun. And our inventories, if you were to track it over time, have declined over the entire time, which means that we're not building enough homes. A lot of these other channels, I don't know what data they look at. I mean, I've watched a few other ones. The data they pick is not correct. They, in my opinion, have no idea what they're doing. None at all. And they're getting a lot of views. I don't want to name the channels. I don't want to, call them out, but I can tell you they don't know what they're doing. I'm not saying that I know everything and I know everything that I'm doing, but they are literally using data that makes no sense to use. Like, they'll compare a percent on the x-axis and a percent on the y-axis. Like, inventory increased 30%. It's like, oh my God, this is the stupidest metric to ever use on an X or Y axis. You would never use a percent in that case. So if you were at record low inventories of 0.1 months, which means you have zero inventory, and it were to go to 0.2 months, which is 100% increase, and you're still at almost record lows of completely low inventory, why would you use a percent? That makes no sense. The percentage increase of inventory in some areas could go up 1,200% to balance the market. But why would you put it as a percent? Nobody uses a percent. The data that you're using is completely incorrect, in my opinion. And you know what? Quite frankly, it makes me a little bit mad. It makes me mad that they're trying to deceive people. And if they don't know that they're trying to deceive people, then they're that messed up. They really have some work in front of them to figure out what this market is going to do. It says here, the strong reversal in silver today was very encouraging. Yesterday looks like a bear trap. The weekly chart is shaping up nicely to potentially have a bottom, at least for the short term in silver. And I know a lot of guys, a lot of silver and gold guys on the channel. Including myself, I'm a huge physical metals fan. Once you get this stuff in your hands, guys, you can't get it. It's like addictive. You just want to keep buying it. It's a very addictive thing to hold on to because you're off the grid. It's an amazing feeling to have this type of metal or wealth. It just seems like it's wealth in your hands. And I don't know if we're at a bottom yet. I'm gonna say that the charts, they don't look like they're bottoming. It looks like we still have some time, but I don't have the crystal ball. I'd love to see a big bottoming pattern or something reverse on higher. The buyers to step in and see some nice big buying pressure candlesticks and some small down days. But we are seeing big down days. It's like day after month or whatever. And I think we just have more time. I'm going to hold on to my stuff. I'm not selling it. I'm not going to give it to anybody. So this one says, thanks. Hopefully you look at comments, work off of trend lines, TA, and cycles. It looks to me like we put in a daily cycle low yesterday, followed by an early signature of a turn today. I wish I could send you my chart on GDXJ. Suffice to say, it clicked. By the way, stocks lead, so looking at commodity charts themselves won't give you the turning points. The key now is verifying the signal where the best one would be a gap up open on GDXJ tomorrow, fingers crossed. So what I look for in the charts, it's probably a little bit different than what other people look at, but I actually look at the candlestick body lengths and sizes. And when you see big candlestick body lengths, it means that you have overwhelming buying pressure. And then what I want to see next to those big up days, the big candlestick body lengths, are small little down days. And what that's saying is that we've got far more buying pressure than selling pressure at the prices that we're at, and that the sentiment is changing. I don't see the big body candlesticks yet. We've got one today, but there's a whole bunch behind it that are big sell-off candlesticks, a bunch, and they're sprinkled all throughout. And they're smaller up days, which means that the selling pressure is far greater than the buying pressure. The one thing that is completely dumbfounding me is that the conditions that we have are absolutely ripe for gold and silver to go higher. So the timing of this, I don't know when this thing's going to turn. It is completely ripe for market conditions for gold, silver, platinum to go higher. But I don't see the buyers outweighing the sellers in the charts using the candlesticks and the buying and selling pressures that I have developed myself. Says I'm holding recap until it crashes or laugh all the way to the bank. I'm pretty much with you there. I've got a good stake in recap. Andy, are you still bullish on Appia Energy? Yeah, I own Appia. I still own it. I have sold none of my shares of Appia. So I'm holding on, and you know what? Let's ride this thing higher. I think it's going to go higher with time. And I see some people about manipulated and hopefully Basel III, and that they're pushing the stock prices down to get out of, or pushing the precious metals prices down to get out of their shorts. And maybe that's the case. Ringo Stark says, my technicals on oil stocks show a pause with potential tradable correction, and I just got a buy signal on junior miners today. As to why, I have no idea. It's TA. I think that oil could potentially still move higher, but on the very short term, guys, I'm not a short term trader. I look at the big picture moves. Big picture moves take years to develop and years to play out. So I loaded up when it was very cheap based off of ratios. Ratios is an asset priced against an asset. And in history, they just go up and down against each other. Whenever that ratio becomes favorable for a certain asset, especially if it's an anomaly in history, I start looking at it and then I look at the charts. If the charts look good on a big long-term perspective, I usually buy for some months. I cost average in for a couple months if it's really low, and I may cost average in for a couple years even, depending on if we have short-term volatility and noise or a crash like a COVID crash. And then I buy like no other, and then I hold on until the ratio changes. That has been the most successful strategy that I've found. And it's not just like by a little bit, it's by like everything. Like everything else doesn't matter. This strategy works. Everything else is just like pure luck. Unless, well, it's mainly just pure luck. Because this is what you have to identify: market conditions, you have to identify valuations. And then if you tie it all together, you're going to win. It's a very high probability of winning. And I don't know if there's a way that you could lose if you hold long enough. I mean, you can hold something that's cheap and it can remain cheap for a while. But if you hold long enough, if it's a cheap asset, you're going to win at some point. So that's kind of where I'm at there. It says, sprinkle some more into oil and gas today and have been sprinkling into uranium. Let's hang on. No cabbage hands. And I have been adding a little bit as well. I bought UEXCF. That was one that was down. STTDF, Standard Uranium. RECAF, RECAF, and Nova Royalty, NOVRF. Those are the ones that I have purchased. PLG is looking pretty good down there. I'm getting pretty excited about that. But those are some that I sprinkled a little bit of money in, and I'm holding on because I think they're close to bottoms there. And some of them, they've got patterns where they're about to break, and hopefully they break. Hopefully it works out. Remember, I'm a longer term guy. I'm not a short term, but sometimes, it's fun catching the short term move as well. So that's, NOG. I own NOG. I've bought that one somewhat recently. And guys, if you see these, these thanks for commenting stuff, it's not me. And especially if they even use my name, it's not me. So I don't have WhatsApp. Don't try to WhatsApp me. It's not me. Rocket ship today. It is. I think we're getting close to a move up in uranium. I don't know if we're exactly there yet. I still see half of the companies kind of selling off. I see other companies looking like they're trying to put in bottoms. And again, other companies went up quite large today. What I'm looking for is it to kind of come down and sit on its resistance line, support line, I should say, support line. And the support line is kind of where the highs were at. I think it's going to sit there, base just a little bit, and then we're going to go. But I could be wrong. Sometimes they just touch it and go. So I'm a little early on this. I'm going to cost average in. I still think some of these companies are pretty cheap, and I'm going to hold on. I'm not afraid of any of this stuff. So what do you think about Avintiv? And that's a oil company, and I think it's a good company. I don't own it, but I think it's in the right sector at the right time, that's for sure. And I'm sure they'll make some good money. This guy's short in natural gas, no value here now. Hey, if you want to take that bet, go for it, man. I would not be shorting natural gas. You're literally jumping in front of a freight train, in my opinion. And whenever the momentum is big, I don't play with big momentum. I go where things are really condensed down, like RECAF, basically to a dead period. And hopefully that turns out to the upside. Says, thanks, Andy. I'm just a guy in the comment section, but it looks to me like we are in the early stages of a market correction. Commodities are showing signs of decoupling from the broader market. People will keep dumping bonds. Hopefully our commodities hold up through the correction. And you know what? It's hard to tell. I don't know how these things link and delink. And I've talked about that before on some of the videos saying, hey, look, I don't know what this is going to look like when one sells off and the other goes up. But I think they will decouple. I know that. I just don't know how it looks. The valuations are incredibly good for commodities. We are seeing the commodity to stock ratio favorable for commodities, which means commodities are going to outperform stocks here probably from this point forward. And I'm incredibly excited about seeing that because, one, it verifies that the valuations are coming up on commodities in relationship to stocks. And that's the whole reason we're investing in it. And it's breaking a big pattern, which means that this move could last for a good time. And what I think is going to happen, and this is just my opinion, it's not a fact. Don't base any investments off this, what I'm about to say, but I think there's a big wave of inflation coming very soon. It's like right in front of us. And oil is telling us that. Oil's been just moving higher, creating a pattern, breaks the pattern, creates another pattern, breaks the pattern, creates another pattern, and breaks the pattern. And we're seeing that with our oil companies as well. And the entire sector is moving up. And natural gas is, I mean, that thing's just gone. And we just broke a massive downtrend over 10 years in natural gas, which it could move quite a bit higher. I mean, it could go to $10 a MMBTU. So I don't try to step in front of this stuff. Just I get invested and I hold on. So if we get all this inflation, it's going to make its way into all of these different commodities. And we're seeing that in the CRB index to stock ratio, that valuation. We're seeing it in a lot of these things. And I feel like almost some of them are trying to be held down, like copper, almost is like it's trying to be held down. And they're probably going to try with oil. They're probably going to try with all this stuff, like gold. But I don't think they're going to be successful. And I think they're just going to, commodities in general are going to rip it at some point. I mean, just rip it. And there's no stopping it. But again, that's just my opinion. I'm a bull in this sector. I'm not saying this because I want to say it. I'm saying it because that's what the charts are telling me. And that's what I'm reading. So, uranium and this little pullback, that doesn't faze me. I kind of laugh at this stuff. And when you become very, very comfortable with the thesis, if you become very comfortable with reading valuations and like basically ratios, the valuations are the ratios. If you see an asset super cheap in history, so two assets and this one's real cheap and this one's expensive, you buy this thing and you just hold on until the ratios go back. And when you do it like once or twice and then you basically get confidence in it, it's like laughing after that, because you just sit there and you buy it when it's cheap. And if it takes a couple of years when it's really low, you just buy it for a couple of years and then you wait another 5 years and it gets expensive and you're like, wow, I can buy way more of this other thing. That's the only way you can make purchasing power gains, is if your asset can buy more of other assets. So I don't think there's anything in this world where it's as reliable of a signal to make purchasing power gains. Because if your asset that you're buying is cheap in relationship to all other assets, and eventually that asset has to go up and revalue itself higher, I mean, that's the whole point of investing. You can't take an asset that's at all-time highs, and you can, for a very short period, maybe make a little bit more, but you can't take an all-time high asset, have it go down against all the other assets, and you can make money, but you can't make purchasing power gains, because all the other assets went up and you can buy less of those other assets. And that right there is the whole basis of ratio investing. And I don't know of another way to actually make purchasing power gains. It doesn't make logical sense. So if you get the valuations right and your market conditions support increasing valuation of that asset, well, then you have absolutely everything you need to know in order to invest over in any asset. I mean, that's it. It's that easy. You buy an undervalued asset, the market conditions change for that asset to be valued differently, and then it gets revalued. And that's basically what I worked through when I developed the thesis in the beginning. And guys, I didn't go to school for this. I'm just an engineer with a lot of math and science background. And I took a look at basically all this stuff and just pieced it all together. And I don't know if people in economics do this. Maybe they do, maybe they don't. And what I looked at was the real estate cycle, and the real estate cycle basically determines the value of all assets because the real estate cycle determines inflation, and inflation has an impact on interest rates, and interest rates is what prices all assets. That's what I found in my that's what I found in my research. So that's what I go by. But this is getting kind of long. I'll end it here. If you guys have any questions, put it in the comment section. I'm really grateful that you guys are keeping the comment section so clean. So that's good. Thank you for doing that. And if you guys like this channel, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.